Welcome back to Season 2, Episode 7 of Finance Bros, Navigating Risks and Riches in Singapore. In today's episode, we explore personal risks. Let's dive in. In episode 4, we talk about financial risks and what are the financial risks we will face in the market. So in this episode, we'll talk about the personal risks, the risks we will face every day and how can we manage it. So what are the potential risks we face every day, Simon?
There are 5 types of risks that every individual will have. Okay, the first one is called the risk of hospitalization. Second is the risk of accident. Third, the risk of getting a critical illness. Fourth, the risk of getting a total permanent disability. And fifth, the risk of premature death. No matter who you are, how rich you are, how poor you are, these are the risks that we will face every day. So how can we manage it? In general, there are 4 basic techniques of risk management. First is to avoid, second is to reduce, third is to transfer, and fourth is to accept. Just to make sure all of us understand this, let me just tell you a very simple story. Okay, today, Jimmy wants to eat chicken rice. And the chicken rice stall is opposite the road where the traffic is usually very heavy. So he listened to our podcast, Finance Bro, and he had tried to apply these 4 basic techniques of risk management. First, he can avoid the risk by eating wonton mee just downstairs. Okay, he just don't want to cross the road. Second, he can reduce the risk by walking over the overhead bridge. Third, he can transfer the risk by asking Simon to buy for him. And fourth, he can just accept the risk by jaywalking across, thinking that the stats of road accident is just very slim. So then Jimmy thinks which is the best way that he can enjoy his chicken rice with the minimal risk. He chose to transfer the risk and of course to me, so I go and buy for him. By saying that, in terms of 5 personal risks, we can also do the 4 basic techniques of risk management. And then we apply and eliminate to find out which is the best technique to apply. Definitely we can't avoid, right? Surely we can reduce by having a healthy lifestyle, and then we can accept it that we will die one day. Just that what if it's not the day that we expected? So the best way is to transfer the risk. An insurance option is the best way to transfer the risk. It plays a crucial role in protecting our wealth and lifestyle by providing financial protection against various risks and uncertainty. And there are so many different insurance options that you can consider, and Jimmy will share with you some.
Okay, so as you all know by now, insurance is the best way to transfer the risk away. And of course, the risk we're talking about in summary is just to tell you that risk that you cannot afford to lose, such as maybe earning an income, providing for a family and loved ones. Hence, when we think about transferring the risk effectively away, it will be through some of these various means, which I'm going to expound a bit more. So the first kind is what we call life insurance, or there are also another alternative, which is the term insurance. So life insurance provides a death benefit to beneficiaries upon the insured's death. It can also help replace lost income, pay off the debts, things like a mortgage, a car loan, personal loan, education loan, cover funeral expenses, maintain a standard of living for independence. And of course, term insurance also offers the coverage similarly, except that it is actually only for a specific period of time. While permanent life insurance such as whole life or universal life provides coverage for the insured's lifetime and may include a cash value component. So the key component here is really, should I choose a life plan or a term plan? Our advice is that choosing between a life or term really depends on your specific financial goals, budget, and current life stages. Both types of insurance serve different purposes, and often they offer distinct features. And here's a comparison to help you make a more informed decision. So to break it down further, with regards to term life insurance, the coverage duration typically provides for a specific period. It can range from 10 to 30 years. Once the term expires, the coverage ends and there's no payout if the insured individual is still alive. And of course, when it comes to affordability, term life insurance tends to be more affordable compared to the permanent life insurance because it provides coverage for only a limited period without a cash value component. As for the death benefit, if the insured individual dies during the term of the policy, the beneficiary will receive a death benefit payout. These payouts can help replace lost income, pay off the debts, cover funeral expenses, and provide financial support to their dependents. And of course, when it comes to the cash value component, a term life does not have any cash value accumulated over the time at all. Once the term ends, there's practically no value remaining in the policy. In terms of suitability, term life insurance is suitable for individuals who need coverage for a specific period, such as to protect a mortgage, provide financial support for dependents until they become financially independent, or cover expenses during the working years. Let's move on to permanent life insurance. So let's talk about the same thing, coverage duration. Permanent life insurance provides coverage for the insured's lifetime as long as the premiums are paid. There are different types of permanent life insurance, including whole life, universal life, and variable life. The cash value component on a permanent life insurance policy, it usually offers cash value component that accumulates over the time, and policyholders can access this cash value through withdrawals or loans during their lifetime. For premium-wise, they are usually of higher premium only because when you compare them to a term life, it offers coverage for the insured's entire life and not just for a periodic term. And it also includes a cash value component, hence is of a higher premium. The next thing, the death benefit, like term insurance, a permanent life insurance pays out a death benefit to beneficiaries upon the insured's death. And this death benefit can provide financial protection and estate liquidity. So the other thing is estate planning. Permanent life insurance can be used for estate planning purposes, such as providing liquidity, equalizing inheritances among heirs, or leaving a legacy to beneficiaries. So the factors to consider as to what kind of policies you should be really getting are the following various. The first is financial needs. You want to consider your financial needs such as income replacement, debt repayment, funeral expenses, and providing for dependents. And of course, when it comes to budget, you need to determine how much you can afford to spend on insurance premium. Usually, 10% of your annual income should be allocated. However, you might have to cross a number a little if the choice of product that you go in with has some sort of cash component. So it might break that ratio to a bigger number. At the same time, if you're doing much later in your life stages, you're probably going to be expecting to pay a bit more of your income. Coverage period. At current life stages, whether you need coverage for a specific period or for your entire life, this is obviously one key consideration. Mm-hmm. Next, cash value. Whether you value the cash value component or the potential for accumulation in a permanent life insurance, that should be one of your consideration factors. And up next, we have financial goals. Consider your long-term financial goals and how life insurance fits into your overall financial plan. So ultimately, the choice between life insurance and a term insurance really depends on your individual circumstances and priorities. It's essential to evaluate your needs, consult with a financial advisor or insurance professional, and carefully compare policy features and costs before making a decision.
Yeah, I find that whether is it life or is it term insurance, I think in one's person life, I think we will have both lah.
Yeah.
Yeah. Because like for term insurance, it's very good for mortgage coverage, right? It's just specific time, 30 years, 25 years, 20 years. Just cover a big, huge amount just to cover the mortgage. Whereas for life insurance, it's for a long time until age 100 years old. And I think life doesn't stop at 65 when you retire. You still have illnesses. You just don't want your children to have that burden or have that stress when you're sick. Right, so I think in a lifetime, everyone will have term and everyone will have a life. Okay, it's whether now you find that which one is suitable for you right now. That's the most important. And I'll cover more on more insurance. Okay, and we have health insurance. Okay, health insurance, or we call it hospitalization plan. It covers medical expenses that is incurred due to illnesses or injury. It helps us protect against high healthcare costs and provide access to quality medical services. Hospitalization plan vary in coverage and cost. It typically cover for private hospital treatment or government hospital treatment. So it really depends on individual to choose where he's more likely to seek treatment at. And we have disability insurance. Disability insurance is not so common in the market, but it does have we does have plans like that. It covers income replacement if the insured becomes unable to work due to disability or illnesses. And this is especially so important for professionals like doctor, like hairstylist, hairdresser. It helps them maintain a financial stability by replacing a portion of their lost income, covering their living expenses and preserving their lifestyle. And next, we have long-term care insurance. Long-term care insurance covers the costs associated with long-term care services such as nursing home, assisted living, in-home care. It protects savings and assets from high expenses of long-term care. And we have property insurance. Property and casualty insurance includes various types of coverage to protect against property damage, liability and loss. Includes homeowners insurance, car insurance, umbrella insurance. And this policy helps safeguard assets, home, vehicles, and personal belongings from risks such as fire, theft, accident, and lawsuit. And last but not least, Every one of us loves traveling. Travel insurance is very important when we go traveling. Travel insurance covers unexpected expenses and disruption while traveling, such as trip cancellation, medical emergency, lost baggages, and travel delays. It just provides peace of mind and financial protection for travelers facing unforeseen circumstances during the trip. So by incorporating all these appropriate insurance options into our financial plans, individuals can mitigate risks, protect assets, and safeguard their wealth and lifestyle against unforeseen circumstances. It's important to review insurance needs regularly, update coverage as circumstances change, and work with your insurance professionals to select the policies that best fit individual requirements.
And I think one of the key insights to all our listeners, if you're out there, is that a lot of mass affluent people, including affluents or high net worth, I think first and foremost, what they really do is to really take good care of the risk before they think about how to grow their money or even take a bigger stake in any source of investments. And I think this is one that really segregates the difference between the affluent and just the normal folks. It's a key focus on making sure that your risk is taken care of. Thereafter, constructing a very sound and systematic investment portfolio to grow your wealth. Yeah. So with this, we have come to the end of this episode on personal risk. I hope you guys enjoyed today's sessions as we do. Do reach out to us if you have any questions on this. Don't forget to subscribe to our channel. Join us next time as we continue our exploration of wealth building strategies. Until then, keep striving for your financial goals. Until next time, this is Jimmy and Simon signing off.